Good morning, traders from Chicago. It is 8:02 a.m. in Chicago time on September 1st, the beginning of the new month, 2021. It is Wednesday. Today, it's episode number 2064. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, popping right over into our pre-market summary sheet from Convergent Trading, we see that there's a mild risk on sentiment. The Euro stocks leading the pack. The Euro stocks very strong this morning, up 44 points or 1.03%. That stock qualifies to be extra strong this morning, over 1%. The On the U.S. side, again, the Russell most volatile at 52 basis points higher. The Nasdaq up 51 points, approaching the all-time high. The all-time high in the Nasdaq's 15,677, and then the S&P is up 13 points. So we're gapping up and over yesterday's RTH session, but we're trading inside of yesterday's Globex session. Crude oil's coming off a little bit. It's hovering around the 68 crude. Since Monday has been mostly sideways, a lot of overlap. It is completely imbalanced. In fact, it's been so since Friday. We're trading Friday's range currently, and we're hovering around a little over, it's 69 and some change, and now falling off on a news event on crude. So that's where we stand right now. Again, mild risk on the market, and you could see in front of you where the action is. Bitcoin futures still stuck in the 47-48 region, and Ether is actually pushing higher, pushing through the 3,300. That's been somewhat of a cap over the last couple of weeks, and breaking to the upside. From the earnings front, Campbell Soup before the open, and Gref and Chewy after the close. We're about to get into the Q3 earnings season here, so it starts the whole process over. What's on deck? Hurricane Ida recovery. A lot of electrical issues, electricity grid issues, and things like that are also shutting in some oil production. OPEC sticks to its policy. OPEC Plus sticks to its policy despite oil demand. And again, it's the start of Q3. Today, we're getting market manufacturing PMI 15 minutes after the open. Construction spending at 10. ISM manufacturing PMI at 10. And then crude oil inventories and gasoline inventories at 10:30. U.S. total vehicle sales at 8 Eastern this evening. And the Australian balance of trade and home loans at 9:30. The S&P has 184,000 contracts traded so far. P-shaped profile. The inventory in the S&P is 100% long. Almost all of the volume is trading above settlement. That's what that means. 16 and a quarter points of range, relatively normal range. And the point of control is at 45.38, just above the current action. The S&P just dropped off here in the last half hour. So that's where that stands. Looking at yesterday, this is yesterday's Trader Bite. The primary scenario was expected to be an attempt to push through the 25 into 28, and then the fall off. And the expected fall off, the expected key test on the fall off is 45.1650. That's this area here. This is the 28. This is the 25. Okay, so 25, 28, dropped to 1650, and then I was looking for it to knock on the door of the high of the prior session, Friday's session, the low of Monday's session, which was missed by 2 ticks. Expected it to skip and hop around before breaking through. That did not happen. We basically got to about here and then came back up and challenged the 2850 multiple times, ended up with a weak high at the 2850 area, multiple highs there on multiple time frames. I think it's a 2 or 3 TPO high. So the expectation for today is to break through and push to 3450 and then re-challenge that all-time high at 54.4225. Currently, the S&P high is at 54.40. So scenario one was okay. It didn't quite get to this region here and didn't quite breach Friday's range into the next key support below there at 45.02 or so. So that's yesterday's action. Let's take a look, or what was expected for yesterday. Here's what we got. Here's what we have for yesterday. This is the actual. That was the plan. This is the actual. The grind, the push down in the morning was a bit of a grind. It immediately tested. Remember, when we left yesterday, I talked about 25 to 28 being a very important resistance level, and the expectation is to test and fall. That's scenario one. Test into 25 to 28. Pretty decent risk there to get short. And the short set up right off the open. Actually, the short set up just slightly before the open, and it triggered right into the open. But boy, was it tough getting through this. You could see the overlapping bars a lot. It's like this is like a kind of a slanting zipper back and forth on basically zero delta. There was a fight all the way down, and the first test is expected to be 1650 right here. 1650 comes from Monday morning. That was the opening swing high at 1650, pulled back to 1050, and then from 1050 it broke through the 1650, and then we had the rally on Monday all the way up to the double top at 3450. That's the narrative. That's what the market has done. This is how it advertised price. So we pushed into the 1650 and we ended up breaking through, and it looked good for a test of the 1050. And then we put in a higher low here. Unfortunately, I really messed up this trade. I ended up finding myself short at 1550 due to an error, and by the time I realized that I was short, it was at 2150, and that was just a total disaster, a total write-off of a trade. I'm just being transparent with you. That was very frustrating, and so I sat out this whole region here. The retest of 2850, the multiple tests 2850 on the full session mid there looked pretty decent for a pullback and a break into 3450. That was the expectation, but then it fell through all the both the full session and RTH VWAP, and it fell right back through into the middle of the range. And from there, bounce was expected. It seemed to have failed to test higher. And just grinded sideways for the rest of the session. I did expect balance once we saw the impulse down. I did not expect much from the impulse, and given where we are, there's a lot of structure above. So you got 28 above, you got still 1650, which was broken through, but then we had 1050, 10 even, and so initiating in the middle gave us at best a 1 hour return. A 1 hour return, and so it wasn't worth putting on. So nothing for the rest of the session. So that's where we are. We ended up yesterday filling in this low volume node area with balance. So what we can do, and remember Monday, the expectation, the statistical expectation is for it to test higher, consolidate, and revert back. It was supposed to be a reversion back to balance. Why? Because Friday was a breakout day, and statistically speaking, historical probabilities say that we generally don't have a breakout P-shaped day, trend day, followed by another breakout P-shaped trend day, which we did on Monday. So that was kind of an anomaly on Monday. The expectation on a breakout P-shaped day is that the next day it takes out the high. It's likely to take out the high, I should say, and then it's likely to revert back and balance to create what is traditionally known as a high flag or a consolidation to suck in more volume and give a base for buyers to continue in the next session. But what it did on Monday is it gapped up and then it held a 2-tick gap open before trending higher and balancing at the top again. But when we came in yesterday after the overnight session, we saw that it took out the high and it ended up putting in an excess high. An excess high, this is what an excess high looks like right there. Look at that volume right there. See that excess high? So I talked about this yesterday. It pushed and it basically fell through that excess, and that's where the 28 comes from pre-market. And we ended up holding 28.5 on the high. So the overall action yesterday was somewhat expected. I expected balance or at least a skew down into prior balance, and we got balance, and now we're pushing higher. So that brings us into today's action. Today's action has been bullish from the start. It immediately, on the reopen, it immediately took out the 28.5 triple top there. Actually, it's got two TPOs at 28.15. It's got two more TPOs at 28 quarter. So very, very weak high. It pushed up against it a lot. So the expectation is we would likely break through and get into the 34.50, which is where we paused right here. That's a 34.50, and then we pushed into 40 before holding steady sideways. The point of control is right at the top of the range. So this is somewhat of a P-shaped profile. It's skewed higher, at least. It's a balanced profile with a higher skew. The point of control at 38 and VWAP at 34.50. The old double top is the full session VWAP, and the mids at 32. A lot of noise here. So until this last push down that we saw over the last hour now, overall this looked quite bullish, and it looked like it was holding the 34.50. See that right there? Very good structure there. It comes from way back here. Very good structure, and this looked like buy into the 40 high in the overnight in the day session for the overnight stat. Look for it to push through to 42.25 all-time highs, and then target. The plan before this drop was target 45.50, or more likely 45.48, something like that. This changes things a little bit here. We're coming back into the 28.50 top, so it creates a different kind of opportunity where we're likely to watch carefully how it treats at 28.50, and there's a support block here between 28.50 and 25. If you recall yesterday's Trader Bite, we were looking for resistance between 25 and 28, and now that resistance is likely to act as support. There's a fair amount of volume up there from the overnight session and the full session. You can see it right here, right? And there. We expect that to act as support, and if it breaks through, then we're wrong. We take a stop and we know that there's not enough strength to hold it higher, so we look for the opposite, or we look for balance. We do not look for longs once it breaks through. So this high at 40 has a lower high that it just put in, and it just broke the most recent lows. So this is looking somewhat mixed, bearish, technically bearish, but we have a high, lower high, took out the low at the bottom, at the trough, but then we also know that there's 28 to 25 below us for support that we can lean on. So it's worth a shot, in my opinion. So take a look at how the market treats that 28.50 on the open, and you have immediate resistance above. If you get long around the 28 to 25 area, there's immediate resistance above. At what price? Can you guess what price you need to watch out for? Let's see if you're picking things up. What price do I need to be scaling out of, in front of, before it gets there if I get long in the 28 to 25 region? What is that price? I'll give you a minute to try to answer instead of giving you the answer. Okay, we have 35, 37, 34.50, 38, 35. The answer is 34.50, right? Somewhere. 34.50, 35, who cares? But what you have then is, again, there it is. Boom, boom, and multiple tops here. So this area was supposed to be support. That was support right here. Now becomes potential resistance. And so we want to scale out. If we get in at the 28-ish, we want to scale out ahead of that 34 and leave something on to see if it plows through and takes out this lower high it just put in at that lower high is 39.50 versus 40. If it pushes through that 39.50, then you likely have a runner into 42.25, and it's likely to continue to 48 as all the shorts that have put on their volume down here, all of those shorts from yesterday are likely to get squeezed into 45.50. That's the expected action there. Okay, these are hypotheses. These are not trading plans. I'm not telling you what price to get in at, what the risk should be, and so on and so forth. So just use at your own risk. I'm not telling you how to trade. I'm simply sharing with you my perspective on the price action currently. A quick look at the composite. We see that we had a completely balanced day. What we saw yesterday, let me repeat, what we saw yesterday because of this Alex's comment, and I said it's going to do something. I never said it's going to do something. I said it's likely to do something. I'm simply playing the odds, and I want to be clear. Nothing I say I'm not an oracle. Nothing I say is what the market is going to do. I'm playing probabilities here, period. So what we saw yesterday is what was expected on Monday. After a big up day, we expect the action from yesterday to be there on Monday. It wasn't. It ended up rallying and then pulling back into the close to the 25. That's where the 25 comes from. A ton of volume went off at the 25, and then we had a structure into the 28 from the overnight session. And that's where we get the 25 to 28 zone, which proved to be the high. The 25 proved to be the high at the open for the sell, and that's scenario one. Scenario, not guaranteed plan. It's a scenario. Scenario one, push into 25, sell the 25, look for 16.50, look for 10.50 and 10 even, and potentially push into 45.02. That's scenario one. And it doesn't mean that it'll work out that way. It doesn't mean that the market will even care about it, because a lot drives prices. It takes one trader to cancel out your edge. One trader, one trade, okay? And it's just the randomness of the market. But we come in with a plan and an expectation so that when we do put the trade on, we know what to expect and what to measure, as opposed to looking at our Dom and freaking out every time it flutters. We want to get out of that zone. This is how professionals trade. You can't live by every tick. And the biggest problem I've seen, having been a risk manager, I own a brokerage, EdgeClear, and watching how traders generally trade, the biggest problem is traders hold on to losses and they lock in wins too quickly. They don't allow the trades to give them a good R factor. And that's the whole point of the trader bite. I've been doing this for years. You can tell 2,063 episodes. And that's the point, is have a plan so that you can, once you're in, you have a better chance, I should say, of filtering out the noise or keeping the noise out. This is the point, okay? So I just want to be clear with that, because, and I'm not picking on Alex here, what Alex is thinking, I'm sure hundreds of others who watch the video may be thinking, and I want to make sure that we set proper expectations. So yesterday, completely balanced day. So we have a 2-day profile with a point of control at 25.20. So that's the next level down, 25.20. Overall, we are not letting go of these new highs. We're not letting go of these highs, and so we stand a chance at another run for the all-time high. Let's take a look at what's expected here for today. By the way, I don't mind the challenge, the intellectual challenge, somebody saying, well, but you said this or that. I love that. I used to do that with my traders all the time. Prop traders do not let you get away with some bullshit. So I don't mind the challenge at all. So have at me, and chances are I'm either going to explain it or change my ways, and you just, by challenging me, you have just made me think about something or observe something that needs an adjustment. So I'm constantly growing as a trader, so take your shot. So here we pull back to where? We pull back to the 28.50. This is a precarious position to be in. We have to really observe how it treats this 28.50 on the open. So 28.50 to 25, and then below there 20 are the next key levels. That we need to watch out for. And so what are we looking at here? We're looking at an open auction out of range of yesterday's high. I'm expecting a retest of 28.50, probably squeezing into the 25, and then I'm looking for a base for it to come back towards the full session VWAP, a little bit of resistance here at the 34.50. So again, I told you we'd want to scale out on the long ahead of 34.50, but ultimately I'm expecting it to challenge the 38, the overnight point of control at 38, and get us the overnight point of control stat, and then the overnight stat challenge the 42 and push to these measured move levels here at 44, 45, and then that's quite a bit of range there from 10 to 45 for one day. The close-to-close volatility sigma right now, the statistical sigma for closing price to closing price, is 23 points. So 44, that's what this vol sigma line is for. 44 becomes the price at which we expect the market to close or below. So that's quite a bit of range there. Again, I want to highlight what the levels are. This is 28, expecting a challenge of 28, 34.50. Again, 34.5. Where's my point? 24.5, 38. And then once it takes out the 38, this high is toast, and the all-time high is toast too at 42.25. And then we start to challenge 44 and 47 before we stall out. That's scenario one. Remember that Friday is non-farm payrolls, and the market's going to start to position for that. It's the first day of the month. There's some positioning that takes place. The market on open, the opening swing today is expected to be wide because it's the beginning of the month, redeployment of assets. So look for that. The secondary is an immediate push higher into 34.50, challenging that, and then failing to hold these prices again, to follow on the lower high theme, failing to take out these prices, pushing back to the 28 through the 25, and then working itself back down. And in that situation, we're likely to challenge yesterday's low, which was at 1250. So that's the second scenario. The second scenario is an auction that tries to push higher, is unable, turns over, and then starts to squeeze the late longs or the overnight longs lower. Okay. This was a long one, but I explained some really key concepts here. I hope you'll come back and listen, and maybe share the video, the YouTube link, with somebody else that you think might use it. If you don't understand how the market's auctioning and what it's doing with every rotation, then I would be bold enough to say that you're probably one of the weak hands in the market. You need to understand what it has done, what it is trying to do, how good of a job, and what areas it might challenge. Good luck.